So the last 24 hours proved to be one of the hardest 24 hours to rest on your laurels, because one of the largest stablecoin, UST, depegged not once, but twice. And we all know that stablecoins are meant to be stable in the sense that $1 will always or roughly equal to 1 USDT, for example. But sometimes we see stablecoins falling below peg like 99 cents per token, or sometimes maybe a little bit higher like $1.01 per token. So such movements are natural and normal because the market is constantly moving with people buying and selling cryptocurrencies every single second. And the market pricing isn't very efficient. That is why we have such cases of the US dollar not being one-to-one with a stablecoin. So just a reminder of how the UST works in a nutshell. So if you're on a Terra chain, you can always redeem Luna for UST, dollar for dollar, and vice versa. So this means that 1 UST will always equals to $1 worth of Luna, which is the stabilizing mechanism for the whole Terra ecosystem. And essentially, if the UST is below peg, like how it is right now, arbitragers can buy it and redeem $1 of Luna with it. So they profit when UST goes below peg, and when UST goes above peg or trades above $1 worth of Luna, they can purchase Luna and redeem it for $1 of UST. So stablecoins in general must have a mechanism to defend their peg, and we have talked about it in previous videos with different types of mechanism like on-chain assets, off-chain assets, and of course UST, which is algorithmic mechanism. But at the same time, you must be wondering what's the purpose of UST, or what's the utility of UST in this case. So this is where Anchor Protocol, which is the holy grail of stablecoin, steps in and pays a whopping 19.5% right now, or roughly close to 20% APY, which is super insane. But this begs the question, why isn't anyone borrowing a ton of money at a lower interest rate and putting it into Anchor Protocol to get a 20% APY?
Anyone?
So this actually happened and was done by Abracadabra's Money's Degen box. So basically they had a system which is a multi-step process that allows users to loop their money over and over again with some leverage to get an insanely high APY on a risk-free stablecoin return. So I'll leave the article in the description down below so you guys can read about it if you are into such degen stuff. So when that happened, it caused UST to depeg, sending Luna crashing from $100 all the way to $46 back in January 2022. And I'm not saying that this could be a repeat of history again, but like they say, past performance is not indicative of future returns, and I hope that it's not history repeating itself, because if it does, things will get kind of ugly for the whole Luna ecosystem. And don't forget that we got a monthly YouTube portfolio as well, where Luna was one of our biggest winners for the last few months, but in this month, I doubt that's gonna happen.
Doubt your doubt.
We all know that cryptocurrencies do have ups and downs, and this is a pretty scary roller coaster ride. And sometimes when we have those gains, we want to safeguard it and ensure that it grows and does not stay stagnant. So this is where the sponsor for today's video, HabitTrade, comes in. HabitTrade is the first crypto-friendly global stock investment platform that allows you to trade stocks available on the Nasdaq, New York Stock Exchange, and Hong Kong Exchange. So this means that you're able to purchase your favorite stocks like Tesla, P&G, Apple, and much more on HabitTrade. But one of the unique features of HabitTrade is the ability to transfer stable coins like USDT directly into HabitTrade platform and start purchasing these stocks with a few taps of the button. So having our profits placed into a blue chip stock allows us to diversify our portfolio, reducing the risk that we are already taking on with our money. The interface on HabitTrade is simple and easy, which is something I really appreciate, because why complicate stuff? Being simple and easy also means that people or beginners who are looking to start investing can use their crypto gains to diversify into stocks that hold fewer risks. And one feature that I really like about HabitTrade is the news tab. So the news tab gives me an up-to-date news and also shows me the price change of stocks that are mentioned in the news, which is a great way to get bite-sized information on the go. There is also a trending page that shows you the latest trending stocks in the market that you can look into. And by signing up with the link in the description down below, you get a free stock worth $5 when you make your first purchase of $300 in stocks. And if you purchase more than $1,000 of stocks, you'll get a free stock worth up to $20. On top of that, you'll get customized market intelligence to help you make informed trading decisions. But most importantly, always do your own research before investing any money into any investment instrument. So thank you HabitTrade for sponsoring today's video. On the Luna ecosystem itself, there's another question that people always ask is, how does Anchor Protocol provide 20% APY? So the 20% APY comes from LFG, or Luna Foundation Guard. So this foundation oversees the whole Terra ecosystem. So LFG primarily focus on the Terra ecosystem, which UST falls under. And LFG does have a UST reserve, which is part of the whole stabilizing mechanism to close the arbitrage or the price differences when UST falls below or falls above peg. So think about it this way. The reserve is kind of like a high pressure release valve that allows high pressure on UST to exit into Luna tokens on-chain. So if you didn't understand a simple word, basically what happens is the UST reserve is a huge pool of money that protects the UST peg and tries to protect the peg by allowing the transfer of UST between Luna. So the relationship between Luna and UST is pretty unique. So if you are yield farming on a Terra ecosystem, you will want to keep your profits in UST because it's stable and you know that 1 UST is equal to $1 worth of Luna, which you are right. But if you check out Luna's introduction video, they do mention that as more transactions take place, Luna token holders tend to benefit from the fees that are collected, which is also right.
Luna stakeholders earn more fees, making Luna more valuable.
So in this case, it seems like holding Luna might give you more benefit than holding UST, or that's what I think. So what is happening right now and why is UST depegging and why is Luna crashing? So we all know that 1 UST will always equals to $1 worth of Luna and vice versa. So this is very important because it comes into play right now. So when the price of Luna is high, Luna will be burned and UST will be minted to keep the peg. And when the price of Luna falls, UST is redeemed for Luna and keeping things stable and back to peg. So this sounds pretty logical, but if we have to extrapolate, so this sounds very logical, but if we extrapolate, which is a word that I've never used since secondary school, but if we put things into a larger scale, so imagine Luna is at $1,000 right now. So someone can literally mint $1,000 of UST by burning one single Luna. So now the person has $1,000 worth of UST. And now imagine that the price of Luna slumps and goes to $1 because of a sell-off. So the person that burnt one Luna for 1,000 UST can now redeem 1,000 UST for $1,000 worth of Luna, which is 1,000 Luna. And this brings us to a situation where out of thin air, we got a surplus of Luna being created and entering circulation, where people are dumping Lunas into the market. And as of recording, we can see that Luna has lost 50% of its value in the last 24 hours span, which is quite worrying for Luna holders and our YouTube portfolio as well. But if we look back, Ducon has made some insane purchases on Bitcoin the last couple of months, with the largest one being a $1 billion OTC deal. So when this happened, Luna had a slight run up, which results in minting more UST because of the algorithm-based mechanism. So the mechanism works in the same way. When the Luna price is high, it will be burnt to mint UST to keep the peg. And when the price of Luna is low, UST will be redeemed for Luna, keeping things back stable. So now when Luna has pumped, more UST is being minted. And while this is happening, the Luna Foundation got DCA into Bitcoin, where it was roughly around the $40,000 range. But now with Bitcoin being driven down in price, the Luna Foundation guard might be forced to sell Bitcoin to keep the peg of the UST. And when this happens, the Luna Foundation guard is essentially taking losses due to the price of Bitcoin dropping drastically. As of the 9th of May, Luna Foundation Guard has voted to execute a $750 million worth of Bitcoin to OTC trading firms to help protect the UST peg and loan $750 million worth of UST to accumulate Bitcoin as the market conditions recovers. So let's talk about what is next for us. So what will probably happen next is that market makers will start purchasing UST at market rate to keep the peg up, and hopefully there is enough Bitcoin collateral to support these purchases and not become a bank run with so many people flooding.
Sanjay, it's time for another bank run.
So one of the best possible scenarios that we can all hope for is for Bitcoin prices to get pushed down because of market makers trying to keep the peg of UST, and we can accumulate some BTC. And when UST goes back into peg, it will be great for everyone once again, and hopefully the Luna Foundation Guard will have more money to continue accumulating Bitcoin in case there's another attack in the future. And as of this morning, the Terra network has been really congested and kind of difficult to broadcast transactions out, but I do hope that things will turn out for the better. So thank you guys so much for watching. Don't forget to grab your free stock with Habit Trade, smash that like button if you haven't, subscribe, and I'll see you in the next one.